There's one thing I don't understand. Why does it please you? George Costanza,
I don't
please.
care. I'm just telling you to get rid of that stock now.
George, what's going on?
Sell it. Just say, I'm selling.
Well, where is the guy? Nothing.
Gee.
Almost half my money's gone. Well, call me right back. Nobody can reach Wilkinson. He hasn't been home or in his office in the past 3 days.
You know, I can't believe you put your money in that Zentrex. You could have invested in my roll-out tie dispenser.
Hey guys, in this video I'll be going over some of the benefits of stock trading, some of the risks, and under what circumstances I think it's appropriate to invest in stocks. So by the end of it, you can decide if it's an investment you'd like to get into based on your own specific needs. For starters, whether or not you should buy stocks isn't a simple question to answer. It really depends on you as an individual. If you think you have good self-restraint and are willing to lose some money within reason and hold on to reliable stocks long term, then yes, I would suggest index funds and ETFs is a great place to start. This is a good option if you're saving for something distant in the future. Because of the volatile nature of the market, it's not a good idea to assume that it'll be doing well when you need your money. So it's best to constantly buy and essentially save up for something like retirement. I don't suggest using this as an emergency fund or something like that, although you could, but it won't cover all emergencies. Because if it's a global emergency like what's happening right now, it's likely that you'll get out less money than you put in, if you just so happen to need that money at the same time as other people, and that will lower the balance of your portfolio. For an emergency fund, you should just look into a high-interest savings account. This is also useful for saving up for large purchases not too distant in the future. It's just a much more reliable option. But if you don't mind the slight risks that come with it, investing in stocks can have a lot of benefits that you can take advantage of, that can make it a really attractive offer if you're the right person. For starters, unlike owning a business or real estate or some other physical asset, stocks are extremely liquid. At any time, you can just sell whatever you want and turn your assets into cash. I wouldn't recommend this obviously because you'll get taxed on any short-term profit you make, more than you would if it were long-term. It also limits your ability to reap further growth in the future. In my opinion, the best strategy is to just buy consistently and do your best to buy when stocks seem to be discounted. You should figure out how much you're willing to lose and set boundaries for yourself. Outline specifically when you're going to sell and when you're going to buy and stick to it. Try not to overthink it. Just stick to your game plan and devote your time to more active means of making money. Have this be as passive as possible. Buy more than you sell and eventually you'll have a significant nest egg built up. Another great benefit of stocks, which has to do with its liquidity, is how easy they are to use. Just hop on your computer or download an app and start trading. There's no paperwork, no phone calls to be made. You don't even have to interact with anyone. Imagine if buying a house or starting a business was that easy. It's completely and utterly passive. It should be frictionless. That being said, don't do it brainlessly. Just be minimalist. There's a reason bots and ETFs consistently outperform individual stock traders. It's because you don't need to overanalyze the market. Stick to the basics. Apple, Microsoft, Google, ETF, index. Just throw money at ETFs until you're rich. Trust me, you don't need a degree to do a little research on a couple of ETFs here and there. Another great benefit is just how cheap it can be. You can start with as little as 20 bucks. Actually, less if you want. Robinhood will let you put as little as $1 towards buying a stock if you really wanted to. Other side income sources usually have a hefty startup fee like a mortgage or permits, or this and that. You get the idea. Stocks are mostly free. Most brokers like Robinhood, H1 Finance, Webull, etc. let you invest for free. I'm not including dividends here because they're not really a benefit until you have a substantial amount of money invested. And until then, they're just kind of there, making little to no difference. I mean, at first, you get maybe a few dollars a year. Hardly anything to write home about. Once you put a few thousand into the market, it'll be more substantial, but still not much. For those who don't know, dividends are just a small payment either in additional stocks or cash that is the owner of the stock, usually quarterly or yearly. It's likely going to be a very small amount, and you won't really notice it until way later in your investing career. To finish off the video, investing may seem scary and unsafe at first, but give it a try. If you're not scared of losing some money when the economy gets rough and sticking around when it rebounds, then you'll probably do great. It might seem a bit unstable when you compare it to a bank account, but if you know what you're doing and aren't on a time constraint, it can be just as safe. If you do it right, it can become essentially just a bank account with a crazy high interest rate. Thanks for watching. Subscribe and leave a like if you found that informative or even mildly interesting. If you didn't, well, leave a comment. And then leave a like too. Who cares?
Like a brain seizure or something?
Yeah.